Good morning and good evening, and thank you all for joining us wherever you are for this webinar on unlocking corporate value via tokenization. Today, we discuss the potential of unlocking value through the creation of digital assets via the power of blockchain. At its core, tokenization replaces a tangible asset with its digital equivalent. Digital assets are easily tradable across jurisdictions. The power of blockchain technology also allows for illiquid assets to be unlocked, providing for a wider range of investable asset classes. As a jurisdiction, we specialize in facilitating cross-border trade and investment, and digital assets are expanding the opportunities. Today, our experts discuss the potential of digital assets to elevate the range of cross-border business and investments. This webinar is brought to you by Fusang and BVI Finance, and we are extremely grateful to Fusang for the partnership and for organizing this webinar with us. We're also thanking our supporting partners, Appleby, Bank of Asia, Access Blockchain Association, ASEAN Blockchain Consortium, Blockchain Association of Singapore, FinTech Association of Hong Kong, the FinTech Association of Malaysia, and Women in Blockchain Asia. Do have a really enjoyable webinar, and we hope that our experts will really enlighten you today. Thank you for joining us, and I now turn it back over to our moderator.
Good day, everybody. Thank you very much for joining us on this webinar. I come to you on a beautiful crisp morning in Roadtown, Tortola, British Virgin Islands, and I trust you're all well wherever in the world you may be based. As Mon just mentioned, I mean, in terms of discussing unlocking corporate value via tokenization, my presentation will focus on the British Virgin Islands as a jurisdiction and a domicile of choice for a lot of the founders in the digital asset markets, and the reasons why BVI has really founded and cemented its place as a leading digital asset jurisdiction. Could I ask for the next slide, please? As mentioned, I'm managing partner British Virgin Islands. Excuse the photo, it was taken about 100 years ago. Before joining BVI office, I was in the Hong Kong office of Appleby for a number of years. So I do think that has given me somewhat of a good understanding in relation to the connectivity between the Asian markets and BVI as a jurisdiction. If we can move on to the next slide, please. The first aspect I want to look at is obviously, why do founders of digital asset businesses choose the British Virgin Islands? And before looking at specific issues related to the digital asset sector, I wanted to take a moment and do a macro analysis and look at the level and the rationales that apply to all financial services, whether digital or otherwise. The British Virgin Islands is a British overseas territory. What that means is, as a number of other British overseas territories, it has developed some leading jurisprudence, particularly in the corporate commercial space. It creates very flexible legislation that really suits business owners and gives them flexibility of operation and independence as to how they want to operate, whilst at the same time ensuring that it's created in a very structured and regulated environment, ensuring the best for both worlds of the business owners and operators, as well as relevant investors. The most recent figures have reflected that the BVI has 375,000, just over that figure, active business companies. This gives an indication of the importance and the use of the jurisdiction generally in terms of international business and global operations. I can mention that figure represents a 4.44% increase in new incorporations from the preceding quarter. which goes to show that more and more people are using the BVI as their jurisdiction of choice for their businesses and for their operations. Whilst BVI business companies are unquestionably the form of business entity that is used the most, BVI does offer a range of other structures and vehicles which are used for various purposes. Those include, as I mentioned there, we have over 2,000 limited partnerships and over 1,900 investment funds, which I will deal with a bit later, particularly in the context of the crypto fund environment. In terms of figures to hand, and this is relative to a study that was done and commissioned by BVI Finance some time ago, we have assets held through BVI entities with an estimated worldwide value of over $1.5 trillion. That indicates, again, the importance of the jurisdiction to international business and trade. Obviously, the BVI operates on a 0% corporate tax rate, and that tax neutrality is certainly an attractive factor in people deciding on the BVI as a jurisdiction of choice. But of course, there are a number of other factors that drive people to decide on choosing the BVI. Next slide, please. In terms of the Asian connection, again, in terms of studies that have been conducted by BVI Finance, it is estimated that approximately 40% of all active BVI companies are owned by shareholders based in Asia. BVI is the home to part of multinational group structures of over 140 businesses listed on London, New York, Hong Kong, main exchanges, as well as a multitude of other exchanges and bourses. In terms of foreign direct investment, for the United Nations figures, BVI was the 7th largest source of outward FDI and the 9th largest recipient of foreign direct investment. And next slide, please. So BVI and digital assets. Really, since 2017, we've seen somewhat of an explosion in the use of BVI as a jurisdiction of choice for digital assets in the sector. Initially, we were seeing a great number of initial coin offerings, initial token offerings, and that has continued, but become more sophisticated and more defined, really, in terms of its purpose. Additional uses we've seen are decentralized finance, crypto exchanges. Obviously, that is a key development, with Fusang being one of those exchanges that has chosen BVI as its domicile of choice. We're seeing more growth in terms of the non-fungible tokens. Other developments we're seeing are streaming platforms in terms of streaming of content, and then related to that, tokens are being launched for the purposes of facilitating those streaming platforms, as well as the offer of other digital assets, platforms, and products. Next slide, please. Crucially, and I know this is the real crux of the matter, we need to look at the regulatory environment. And this is the driver in terms of the attraction of the BVI's jurisdiction for fintech and regtech in the past and going forward. As I mentioned, 2017 was the start of the BVI growth and development of digital asset offerings. We saw certainly a great number of ICOs, a great number of crypto funds being launched. Why? Really, that's thanks in a great part to our regulator, the Financial Services Commission, which has taken a pragmatic and dynamic approach to fintech regulation in the BVI. We are all learning on a continuing basis about digital assets and about the blockchain and their uses on an ongoing basis. And clearly, this is an ongoing process of which there is unlikely to be a a point of where everybody knows everything. I think the Financial Services Commission has recognized that fact and has been involved in a very steep learning curve to ensure that it fully understands the digital asset sector before rushing out and introducing a regulatory environment which can be to the detriment of its clients, the founders of those digital asset products and platforms, and also to the jurisdiction as a whole. Other advantages and reasons why the BVI has really come to the forefront as a digital asset jurisdiction are that there's no exchange control, there's no capital controls, and there's no maintenance of capital requirements. There's no share capital, minimum share capital requirements that apply in the BVI. Again, you're given the flexibility as a business owner and operator to introduce those concepts should you so wish, but there is no mandatory provisions for that. Most importantly, ICOs have generally fall outside the securities and investment business regime. And that is predominantly if there's no fiat involved and no direct fiat transfers. Also very important, there's no requirement for a physical presence in the BVI. Other aspects, crypto to crypto exchanges generally fall outside the financing and money services regulatory regime. BVI's electronic transactions laws allowing electronic signatures, contracts, and records certainly facilitate operations of digital asset businesses. And those laws in the BVI are continuing to develop and evolve as we speak. We've had a range of new pieces of legislation that have come out that have really facilitated the digital asset environment and the operations of those businesses. Probably one of the most important aspects, of course, in terms of AML and KYC, the BVI operates a very strong environment relative to that under its proceeds of crime legislation, and ensures then that the BVI as a jurisdiction is compliant with its international obligations against money laundering, terrorist financing, and other aspects. Next slide, please. I mentioned a number of developments in terms of the laws, one of which is the regulatory sandbox, created in 2020, developed for new tech, innovative fintech. We've had the FSC guidance on the regulation of virtual assets. We've had the new Data Protection Act, Gambling and Betting Control Act, and what we're all waiting for here in the BVI is the Virtual Asset Service Providers Act, which will regulate service providers in this space. Next slide, please. In terms of the structures themselves, the business structures, I've mentioned the business companies and the attraction of those. Other forms of businesses and business entities we see are segregated portfolio companies, limited partnerships, and crypto funds. And I've listed a form of these funds. We're open-ended funds, incubator, approved, private, professional, public, as well as closed-ended funds, the private investment fund regime, which has been initiated in the BVI. Next slide, please. Future of digital assets in the BVI. You know, we've seen the dramatic events, recent events relative to the market and more globally across all of financial services. And I think the more things change, the more they stay the same. Current turmoil has been seen in numerous times in the equities and derivative markets, and we're seeing something similar in the digital asset market. The old adage of buy and hold strategy applies equally to digital assets, as well as to the more conventional financial asset classes. However, having said that, for the past 5 years, the BVI has provided a stable and profitable platform and jurisdiction for digital asset providers. You know, we've talked about the cooperation between industry players, Bank of Asia, the crypto exchanges, professional advisory firms, and most importantly, the regulator and the corporate registry. And of course, we're waiting for the latest piece of legislation for VASP. which will certainly be an interesting development. And yes, the world has unquestionably gone digital, and inevitably so will its asset classes. So I think we're going to see this as a continuous growth area, and the BVI at the center of that. Thank you very much. I think if there's any questions, we can deal with them at a later stage. But that is the end of my presentation. Thank you.
Thank you and welcome everybody. I'm standing here in Hong Kong tonight and it's nighttime, but I understand that we've got people dialing in from all over the world. And really that's what I'm here to talk about today, digital assets, because I believe that just as our entire world today is becoming increasingly digitized, I mean, let's face it, we do half the meetings that we have on Zoom like this. I think assets and securities are going to be no exception. My name is Henry Chong, and I'm the CEO of Fusang. Fusang runs an end-to-end financial ecosystem for what we call security tokens. The idea of taking the same underlying blockchain technology that powers assets like Bitcoin, but using it to represent real-world assets like shares, bonds, and funds. And we think our unique combination of regulatory licenses and operational know-how really let us bring the power of blockchain technology to a world of securities. And I'm going to be talking a little bit about how we envisage these securities actually being tokenized. Today, a lot of people will say, wait a minute, I thought all shares everywhere are digitized already. What do you mean when you say that there are still pieces of paper? Well, here in Hong Kong, there are physical paper shares that companies need to have. But even in countries where you have what you might call dematerialization, to me, that's really still a picture of a share certificate. We haven't fundamentally changed anything about its intrinsic nature. And I sometimes like to show this slide. And unfortunately, we probably don't have time to actually go and quiz the audience about what this is. But if you're eagle-eyed and you look in the top left corner, you'll see a date back from 1606. And this is perhaps one of the world's first ever public IPO share certificates, if you will, for the Dutch VOC, the Dutch equivalent to the East India Trading Company. And you can see on the left how you've got a bunch of stuff written on parchment that functionally is their certificate of incorporation. And on the right, you've got a bunch of names and dates and numbers. And that would be today what we might call a register of members. And what I find most interesting is that this 400 years ago, and this, what Fusang's cert of incorporation used to look like when we would print these things on paper with a wax seal, doesn't look that different. Again, the only difference is that one is generated as a PDF as opposed to being written on parchment. Likewise, probably quite familiar, most of the audience looking at a share certificate or something like this, a register of members. Again, all of this, even if it might be in some CSP firm's database, to me, this is not really digitized, not the way we can today with the blockchain. I know this looks like a lot of numbers, but this is what Fusang's register of members today effectively looks like. We've taken all of our own paper share certificates and swapped them out for digital blockchain-based tokens. And I think one of my team can probably paste into a chat a link where you can actually see these things live on the blockchain if you go to fsc.fusang.com. And I bring this up just as an interesting example, I think, of what can be done, how we can, for the first time, start to have real digital securities that can be tracked, traded, and transferred entirely online, where we can run a real-time log of who owns what without needing to swap pieces of paper left, right, and center. And that's really what I want to dig into today, a classification in terms of how to think about the entire digital asset universe. I mean, crypto has been top of people's minds for a long time now. The last few weeks especially, a lot of digital assets, whether Bitcoin or things a bit more adventurous like Terra, have just absolutely collapsed. And I think a large part of why all of this is happening is that in many cases, there isn't an intrinsic value anchor. And as exciting as I think blockchain technology is, I think it's high time that we start to say, how can we take traditional securities, the shares, the bonds, the real estate that we're all used to investing in, and how do we digitize that so that now we can have tokens represent something with fundamental value. And I know there's a lot of check marks here, but I'll run through a couple of slides just to lay out the way in which I see the digital asset universe in terms of some of its classifications, because I think especially after these last 2 weeks, we're going to increasingly stop talking about digital assets as this big amalgamated share class. And instead, we're going to say, you know what, the ability to tokenize something is a new technology layer. But what the question that we should really be asking ourselves is, what does this asset really represent? Is it, as you see on this left column here, what I call a native cryptocurrency, something like Bitcoin that purports at least to be a store of value or a medium of exchange to be used as a payment in the transaction of goods and services, for example? Is it the second category, what I call fiat-based cryptocurrencies or stable coins? Digital tokens that directly are backed by fiat currencies. And of course, there's this whole new emerging area of algorithmic stable coins, which are honestly a little bit messy. But again, assets that try and act as currencies as very distinct from all these categories you see on here. Assets, tokens that are trying to actually either have a use or be an investment. And this to me is really the fundamental distinction that everybody's going to be talking about in the weeks and months to come. In the past, most tokens that you would see there out in the wild would fall into these third or fourth categories. They'd either be characterized, at least legally and by the regulators, as a utility token in some form, and the issuers would swear to high heaven that these are not for investment purposes, that people are coming and they are investing in these things because they want to use it, a pre-sale effectively of goods and services. Very interesting as a concept, but not really an investment per se. And of course, we recently have a lot of non-fungible tokens, things that are by definition one of one. And people use these to represent art, collectibles, and other things that I'll show in a second. But this fifth category, at least for firms like Fusang, is what we're most interested in. Again, marrying the power of blockchain technology with the ability to tokenize the assets that we're all used to investing in, shares, bonds, funds, etc. I am not going to dig in too much to some of those cryptocurrencies, but to talk a bit about the kind of crypto that we're used to talking about, ICOs, NFTs, etc. And I think, again, it's important to break these things apart to say, okay, well, what is this token actually doing? What is its functional form? And again, I think the more sophisticated regulators, the BVI included, understand that what we should be regulating is not the technology layer, it's the underlying asset, and asking that all-important question of, well, what is it actually doing? Is this token providing a benefit? Is it giving me access to a platform in some way? Is it just for fun? Is it a collectible? Is it something representing some kind of real asset underneath? Likewise, when you look at things like NFTs, to me, we should really call most of them art tokens. They're interesting. And I think that physical art and digital art can and will be treated the same, interoperable, as we go forward in the world. But a lot of people, I suspect, aren't buying these NFTs just because I think they are pretty. Someone told me this fantastic quote recently, and he said, when the price of art goes up, you're an investor. When the price of art goes down, you're a collector, which I found hilarious. Again, right, NFTs can be used just as art forms. They can also be used for utility, to give you access to something, to a club, to membership. Again, all concepts that make a lot of sense. But I think one needs to be very careful asking, well, what am I actually getting? Am I actually getting some kind of underlying right? If I have an NFT that represents something like NBA Top Shot, an image file, am I actually getting IP rights to that image file? Or is it, again, just a collectible? Very important questions to ask. And of course, as I said, the topic that I suspect most of this audience here is most interested in, real securities, things that are regulated, things that represent underlying assets that have fundamental value anchors, things that have a cash flow stream that you can actually run a DCF analysis on, equities, debt, all the instruments we're used to investing in, but simply taken and put onto the blockchain so that now we can start to move, trade, and allow these tokens to interoperate in all the same ways that we're excited about with crypto, but with assets that I hope are a little more stable. And just to finish off in the last 60 seconds, I go remiss without mentioning why exactly Fusang sought to be put on the BVI's list of recognized exchanges, and something we're incredibly grateful for. Because as I've been saying, for digital assets to metamorphose into the next stage of the evolution, where we move past this first wave of really experimentation and proof of concepts, and those are fantastic to prove out the technology and the model, to show how excited people are by the idea of these digital blockchain-based tokens, but to really move into the second wave of assets that are regulated, assets that represent real assets. And we can't do that with an entire ecosystem of partners. Platforms like Fusang, to be sure, but we need issuers who are willing to operate like traditional issuers. We need regulators who understand that these issuers can and should be regulated just like any traditional company looking to do a securities issuance, for example. And that's why, a platform like Fusang coming and getting recognized and saying, you know what? I don't think digital assets needs to be a world in which there is a lack of regulation or rules or KYC. We think we can go to the other opposite extreme and actually leverage the power of blockchain technology to be able to track a lot of this data, things like KYC and beneficial ownership data in real time. I've blasted through quite a lot of data. I think if you want the slides, you can pull out your phone and that QR code should, I hope, link you to a copy of the presentation. But come to our website, look us up or ping us on social media. I'm happy to talk endlessly about the topic of digital assets and securities in particular. And I'm really looking forward to our panel and getting to dive into talking about some of these assets.
Good morning, good evening. Thank you so much for joining us. We've got more than 200 people on this call today, and it's really humbling to see the interest in the BVI, obviously, but also in that whole digital asset space. Now, what is really intriguing, panelists, is the results that we've got from the poll. So apparently, we're quite neck and neck with regards to whether the crypto winter will negatively affect the digital assets industry. That's quite interesting in my mind. And the next question, do you think seemingly the direct correlation, is actually evidencing the mainstreaming of the industry? Yes, 51% says yes. So it's quite close as far as polls go. Maybe I'd like to solicit some instant reaction from any of the panel members vis-a-vis these results. Anybody would like to go first?
Yeah, it's quite interesting because it shows that the market is really being followed closely by our audience. There's always been a discussion about what is the correlation really between the crypto industry market and the traditional market. And as we all know, the traditional market is taking quite a bit of impact based on the global market factors that are taking place, whether geopolitical or whether the interest rate hikes and various factors. And we're seeing all of those factors play out across the board in terms of not just industry partners or industry businesses, but also across exchanges and markets across the board, whether it be traditional or crypto. It's showing, though, from where I sit, a very strong proposition that crypto is very quickly, and digital assets, they're very quickly becoming mainstream as part of the future of the markets globally. So I'm happy to see that trend from where we sit, and it strengthens our value proposition as Bank of Asia as well. Thank you. Henry, you can go ahead and chip in from your wisdom. Yeah, thank you.
Always happy to chip in, but I actually think that this crypto winter is going to be bad. The crypto industry has never seen anything like it, because this time it's not just price movements. This time there are structural credit issues making whole firms fall over. So I actually think that this is going to impact the digital asset industry extremely negatively, And I think it's going to be the best thing that can happen to the digital asset industry. Let's be real. When you go and look at a list on CoinMarketCap, there are a lot of major tokens. There are things like Bitcoin, and for better or for worse, Bitcoin has a real use case. People can and do already today use it as a store of value and as a medium of exchange. But when you scroll down that list on CoinMarketCap, very quickly you start to look at things that look a little more, let's say, shaky. And so I think that this crypto winter is going to help clear out a lot of projects the way that the 2001 bubble bursting for the internet sector did as well. And then we can refocus on saying, well, what exactly was the original point of blockchain technology in the first place? What was the real use case we were supposed to be delivering on? Again, if you're using these tokens as investments, what am I actually getting? And then we can start to answer these questions and really bring us into this wave of what I sometimes like to call crypto 2.0.
Well, whether it's called crypto 2.0 or whether it's just called this massive attraction towards what, if somebody has it, I want it too. And then let's forget about the assets, the underlying assets. And this is what we at Fusang keep talking about day in, day out, vis-a-vis assets. And in a particular way, when you look at this crypto winter, it is going to be very difficult for a lot of people. It already is. But, at the end of the day, it just, focuses us on the asset quality. What are your thoughts, Frederick, with your membership at Access Singapore and the situation down in Singapore? How is it all going? And thank you for joining us, by the way, both Deon and Frederick.
Thank you very much. And I really agree with Henry over there. I think right now with this current crash, this crypto winter, when it's not over, we've seen a lot of forced liquidations as well. As you've seen, and in the entire market, what we are looking at right now is that there are a lot of people who are also over leveraged, not just retail, but even institutions, right, or crypto funds. And generally speaking, while all of these forced liquidations are happening, even as we speak, we're looking at this from a wake-up call, back to basics. Fundamentals actually matter, especially with what happened in light of Terra. The UST was a promise that they could have swapped $1 to $1 worth of Luna token, but that has no fundamental backing whatsoever. And so that's why digital assets is particularly important, because it does focus on the fundamentals, the basics. And this is what exactly needs to be built upon.
Yeah, but from a perception point of view, digital assets tend to be lumped. And maybe this is a good opportunity for us to really distinguish what is the asset class. And I don't know if you guys have seen the news, the employees of Terra are now banned from flying out of Korea. We're seeing mainstreaming, not just with regards to the acceptability, but also maybe the regulation. I don't know, Jeffrey, do you want to weigh in on that bit?
Yes, thanks, Farah. I think we've all known that there was going to be some form of correction in terms of the number of tokens that have been issued. And I think this winter is probably just accelerating that identification. I think as well that, for all the talk about asset classes that are decoupled from the market, there was talk years ago, insurance-linked security, that sort of thing.
Yeah.
There's very little that is truly decoupled from the market. We're all interacted. We're all, symbiotic relationships, and we get impacted one by the other. So I do think this has now come to the fore. I think, as I mentioned earlier, this is a learning process for all of us, including for the regulators. And I think this is going to be a key time for the regulators to take stock, see what's going on, and then look in terms of how can they better manage these assets and markets and platforms going forward.
Yeah, no, absolutely. But what's quite interesting is the point of view that you kind of garner from the market. Someone told me in a casual chat that actually they blame the central banks for the crypto winter. And the reason for that was because everyone had negative or zero interest rates. And so no one had any other choice but to invest in cryptocurrency. Now, at the end of the day, you can justify it the way you want to, but let's not forget the underlying asset quality, which is what we keep going back to. I wanted to, talk a little bit, Henry, about this. You know, the BVI regulators have admitted Fusang as a recognized exchange. What does this mean actually for, you know, the bulk of our audience here who are from the BVI or who are, as Jeffrey was mentioning, the 40% of owners of BVI companies located in Asia? What does it really mean for them?
Absolutely. Well, to follow on from what we were talking about, I actually think investors also need to step up and start taking a bit of responsibility for their investments. Just as there are good equities and bad equities, I think investors need to also ask that hard question of, wait a minute, what exactly am I buying? And if you can't answer that question, you shouldn't be buying it. But of course, us as platforms, as jurisdictions, we need to play our part on the other side as well. And well, number one, we need to start making available in the first place assets that are tokenized that represent something a little more substantive, like equities. The truth is the world in these last few years has been caught up with a lot of hype around crypto and NFTs and etc. And I see that pendulum swinging very, very rapidly. And again, at least for platforms like Fusang, we've always focused on, can we list securities, shares, bonds, funds, etc. And being recognized as an exchange in the BVI just means that we can now take a BVI entity like a BVI company and run the same process. We can take the shares of that BVI company and represent them as digital tokens to keep that record on the blockchain. To be honest, a lot of these things just make a lot of sense to me, but the truth is there are a lot of jurisdictions where this is just not possible for a variety of legacy reasons. You know, some jurisdictions like Hong Kong, as I said, have the requirement for physical paper, so it's going to take them some time to work through that. And the BVI has a golden opportunity to really cement its status as the leading jurisdiction to house these regulated digital assets and securities. And never mind even the asset side, just as important, and I'm sure that this is the thing that regulators care most about, is these assets. Who are the investors? Where is the money coming from? And making sure that I'm not actually taking in dirty money. This is, of course, something that people perpetually bring up when they're talking about crypto. If I'm taking Bitcoin, how do I know that it's not tainted, that it hasn't been the proceeds of drug money? And again, this is why I think having regulated securities like shares is so important. Like it or not, every security, every share, for example, in the world has to be mapped back to identity, right? The world of bearer assets and securities is gone. And I think, honestly, it's gone for good reason. I want to know who owns the shares of Fusang, for example. I want to make sure we don't have random anonymous shareholders lingering around in our register of members. And I think the BVI actually stepping up and saying, you know what? Why don't we focus on that underlying principle, again, making sure the asset is of quality, it's regulated, but also that we actually want to do what I'm saying, bind identity to these tokens, and why not adopt new technology to solve this problem?
So we have actually a question. So what I'd like to do with the audience is actually to encourage you to ask as many questions as you'd like in the chat box. We have a question from Sally Yu that says, thank you, Sally, for your question. It says, the cash flow you mentioned coming from tokenized assets still require a centralized judicial system to enforce property rights. Yes, of course. So how much different is it from traditional assets then? So what is the advantage and the potential? Henry?
Yeah. Look, no matter what asset, security or otherwise, we're not going to run away from judicial systems, from tax. I honestly don't really care what it is. Even things like Bitcoin, I guarantee tax and ensuring that, again, you're not touching dirty money are going to be two of the most important questions. All platforms, if you're actually doing this properly, will need to do this anyway. And like it or not, we're humans in a human world, right? I mean, again, there's a long list of Bitcoin disputes and they go to court like everybody else. So I actually think that's a feature, not a bug. In terms of the advantage and the potential, at this point, I actually don't think we need to talk too much about it, because you can just look at the crypto markets and you can see all the things that people do there. The world of DeFi, for example, is incredibly exciting. A lot of the concepts make a lot of sense. And that, to me, I hope is really people's takeaway from this entire session, which is, you know, it's not that crypto's bad somehow. The ideas, the technology, the business model, people are creating, the idea of trying to engage your stakeholders in a different way makes eminent sense. We just need to start making sure that the underlying assets are actually of some kind of fundamental value.
Personally, I feel that it's such an exciting space that sometimes it's easy to forget there should be an underlying asset. Because you get so, caught up in the business of digitalization and the promise of it, that sometimes it's quite easy to forget, number one. And also sometimes with regards to an unregulated space, it's also quite difficult to remember that it should be regulated. And that's the bit that I wanted to talk to Jeffrey about, actually, as the lawyer in the room. Jeffrey, you mentioned before that 40% of all the BVI companies are from Asia. Now, how do you feel? What are your thoughts about how the landscape in the BVI and how it's evolving vis-a-vis digital assets? How do you see that will benefit these Asian companies registered in the BVI?
Very good question. I think, firstly, the historical relationship that the BVI has had with Asia is crucial in terms of the understanding, cultural side of it, and just the assets that have been used in the past. We've seen it various times. An individual owning a single asset through a BVI company, eventually when he decides to IPO his business, he might then decide, okay, I'm going to go back and use a BVI code because I've seen it, I've used it for holding an apartment in Hong Kong. Now I'm going to do it for my holding company, for my listed entity. So I think that's important, and it's historically been just a connection between BVI and Hong Kong. It's been so strong, such as I came from Hong Kong to BVI. We've got people in our office, we second them from BVI to Hong Kong all the time. We're constantly in communication with our Hong Kong office. That doesn't happen with a lot of jurisdictions, and I think that's a crucial part of it. And our regulator here feeds into that. They know the importance of Asia. They know the importance of Hong Kong, Singapore, Malaysia to the BVI. And that's always sort of forefront of what they're doing and thinking how we're best going to do this. So I've mentioned, for instance, the virtual asset service providers legislation that's going to come out. And Henry was rightly saying, we need to know these things. We need to know who the investors are. But it is difficult when those investors are based around the world. So for the regulators, they really need to focus on the service providers in the BVI and put the onus on those service providers to say, okay, this is what we need. How best do we do it? And can you facilitate that process so we've got accurate, good data in relation to the businesses and their underlying investors? And I think that's going to put the BVI and Asia in good stead to work together in the future.
So it's based on existing relationships. And maybe it's that relationship, Deon, that has caused your BVI-based bank to be called Bank of Asia, maybe?
I think that's one of the reasons. We have a very good tie in terms of our corporate group with Hong Kong. We have a team in Beijing as well. And what we realized is that has really bring a strong level of confidence with our Asian counterparts, and also allow us to be able to offer services, understanding the culture, understanding what are the needs of not just the clients, but also the legal side and the trust corporate service providers that exist between the BVI as well as Asia. Many of them exist in both sides and are quite efficient at providing the services.
Yeah, I mean, it has to be said that in Asia, in order to have an offshore IBC or an IBC, you don't have an IBC, you have a BVI. It's, when you search for something, it's a verb. A BVI is almost like a Google, right? I'm going to Google it. I need a BVI. That's what people say. But, the perennial question vis-a-vis digital players, and I'm sure Frederick and his membership would be happy to understand, do you bank digital players? How do you do it? Why? And there's a question from one of the audience saying as well, like, it's impossible to open a bank account for a BVI company, much less a digital-based BVI company, Deon. How do we go about this?
About 2 years ago, we took a rather conservative approach until what we observed is that the international market started opening up to looking to see how do you bank digital assets. We really embarked in partnering with several partners within the industry, some of the leading, what we saw as the leading partners in the industry, as well as clients that are really forerunners in carving out the market. So we take a very keen look to see what the fundamentals are of those asset classes and see how they're working, who are the partners or UBOs behind those groups. And we have compliance engines that allow us to really be able to tap into the AML, KYC side aspect of it. And as those of us in the industry are aware, the blockchain technology actually is very helpful in providing some strength in being able to track the assets, source of wealth, and source of funds. So those are some of the fundamentals that we apply. So we have quite a few clients that we are working with within the digital asset crypto space for open accounts. So feel free to send me a message after, and I can have a discussion with the clients or with yourself in terms of opening a BVI bank account. Yeah.
Well, I know that I'm sure in Malaysia and maybe in Singapore, Frederick, there will be a lot of interest for sure, because banking is close to impossible for us. And any kind of lines that we can get, we'll be happy to talk to you about. Frederick, I wanted to ask you, Access Singapore is very closely related to regulators in Singapore, and there is this fantastic partnership that goes on between IRAS, MAS, Access, and the other associations in Singapore. And recently, there was the announcement of Project Guardian and how blockchain assets are going to be used, especially in the wholesale banking side. Do you want to walk us through that partnership, as it were, the idea behind Project Guardian, and really where you see that space for Singapore? Because I know, the last 4 years or so, there was a huge ICO boom in Singapore, and then it kind of dwindled. And then, Singapore seems to be on, and it's a bit like an on and off relationship, right? So on again, everything's okay. And the next day, ATMs get raided and then Project Guardian comes on, what's happening?
Yeah, so Access, we're not part of Project Guardian, but at the same time, the regulator in Singapore has been very clear since the very day one, when we were already interacting with them, coming out of the code of practice during the early days with regards to AML CFT concerns. One of the things that they have consistently said that cryptocurrency is inherently high risk. There's no walking away from this, right? The key word here is inherently high risk. And us as an industry, when we were talking with the regulators, we understood that we needed to become much more responsible industry players inside this entire space, and to make sure that we uphold good governance, right? And this has been something that the industry has been working very closely with the regulators. Now, granted that sometimes there has been a lot of back and forth, we've always had a very close relationship and always maintained the stance that while blockchain is a very, very good innovation, it brings down the barrier of entry to a lot of people. It also carries a lot of risk, and how do we manage that risk? I think that part is the most crucial piece. It's not only about looking at it from a perspective of it's a volatile asset, so the entire trade, but it's also about it is a volatile asset. We need to educate more on this, and after that, how do we bring this forward to not only the regulators, but to the institutions, to also the retail side? How do we educate all of these people to say, hey, this is something alternative. This is something that is much more transparent, and here is how you see its transparency, and here you see its advantages. And we've been advocating that together with a lot of the different government agencies for a very long time, and this is what Singapore really wants to become. Singapore wants to become the hub that we can promote that good governance, that we can show that it's beyond speculative, instruments, but it's also that we can use it in a variety of other places, be it Project Dunbar, Project Guardian, with all of its CBDCs and trying to do international settlements. These kind of applications also assist the different industry players along the way as well. And that's where we are trying to build it towards. And with regards to the cryptocurrency scene specifically in virtual asset service providers, we've also looked at it from, okay, what is the regulators' concern? They're always about retail protection. They're always about AML. They're always about CFT, and this is really the core of it all. And how do we address each and every single one of them? And it's always about saying, okay, first you need to do, because this is a digital industry, we need to do eKYC, right? And this is already itself a very significant challenge. eKYC didn't come about unless it's the past 2-3 years, until facial recognition has become a lot more sophisticated, and we're able to do all of that. And transaction monitoring, especially on the blockchain, right? It's yes. How do you figure out these are your black wallet addresses, and then after that, and ensure that the source of wealth, source of funds, they're actually coming in from clean sources. And that's where we build all the way to the travel rule, and then after that, that itself, because it was not invented back during when we were discussing it with FedF, the Financial Action Task Force. There were no solutions when we first embarked on. And then after that, when all the solutions came about, they were not interoperable. And we are facing these challenges as we go along. It's teething issues, but we would definitely get there. A lot of players are innovating, but in this process of innovation, the cost of it all starts to come drastically down, right? And especially if a great comparison would be looking at a digital bank and a traditional bank,
Yeah, no, I completely appreciate it. And I think, Henry, you probably have a lot to say with regards to interoperability and building everything from scratch vis-a-vis our platform in Fusang Vault, client onboarding. And, when I joined Fusang, I found out about whitelist KYC and non-whitelist KYC. And I realized that a lot of the KYCs are not really the KYC. As a legacy person, I would understand it. How long did it take Fusang to develop your ecosystem, our ecosystem, Henry?
Years and lots of blood, sweat, and tears. But actually, to pick up on something that Frederick mentioned, I think the way a lot of people, I hope, will look at this emerging wave of crypto 2.0 is exactly how we look at the distinction between traditional banks and digital banks. At their core, they do the exact same job. They're a bank, and banks are not going anywhere anytime soon. But the way in which banks are going to conduct business, the technology that they use, and as a result, likely the kinds of firms that become banks, that I think can and will change pretty radically. And I think a great parallel is when you look at who the largest securities brokers have been in the world. Well, actually, I don't think I can see the chat from some of the audience, but to poll the audience, if anyone knows who the largest 5 brokers in the world, securities brokers, were in the 1990s, most people will never have even heard those names. Lehman Brothers is probably the only one, and of course, they're gone. Today, the biggest securities and stockbrokers in the world, they aren't even the big banks. They're firms like Citadel Securities, who, when I was a kid, was a global macro hedge fund, and said, you know what, why can't we be a digital market maker, and just leapt into that space. Again, I think that's a great example of very kind of old school job done with radically new and innovative technology, where a new firm just ate the old incumbents. And like it or not, that digitization is going to come to all corners of finance. Banks, brokers, custodians, as you mentioned, none of this is going away. I don't think it should, at least. What we need to say is there a way that we can do that fundamental job better, right? What's the real value that we're adding to our client? Not just in terms of what we do, but in terms of what is it that the client needs from us? And is there a better way to use technology to deliver on that client need?
Yeah, no, it's a very good analogy, actually, to kind of hybridize the two. We have a question from Lorna Smith, actually, and maybe, Jeffrey, you might want to take it in the sense that it is an extension of what we discussed earlier. Earlier, we discussed how the BVI clearly will benefit from old relationships and established relationships in Asia. But she's asking, does digital assets in the tokenization process present an opportunity for growth for incorporation, so fresh incorporations for the BVI? Do you think this is a possibility? And my own question is, what is BVI's USP?
Sure. Well, thanks for that, and always good to get questions from Lorna. So thanks for that, Lorna. In terms of whether it presents an opportunity for growth in corporations, I certainly think the movement away from this wave of ICOs is a good thing for BVI, because what we'd have historically, we'd have ICOs being launched. Once the tokens are issued, you're left with an empty shell of a BVI company that then, in the best case scenario, is liquidated. If not, it sits there as an empty shell, dormant, and doesn't really add any more value to that once the tokens have been dissipated.
Mm-hmm.
With the more sophistication of the market, and what we're seeing is different products, different platforms being developed, I think what that shows is a commitment to the BVI. And once these businesses are formed, it's a long-term relationship. It's not going to be a short-term wham bam issue. We've done the tokens, we'll leave an empty shell. So I think that's a very good development for BVI. And I wonder often, I mean, Henry was saying, and you were saying as well, Farah, in relation to the, to these underlying assets. If I don't know what the answer to this question is, but it's something I've wondered about. If we had blockchain technology with a global financial crisis, with the subprime mortgage market, would that blockchain technology have put us in a position to identify the risks that existed in that asset class before we did identify, before it was too late? So I think that's, these are the questions I think we should be asking. Does that blockchain analysis take us further and give us the tools and the ability to be able to identify risks where previously we wouldn't be able to, and then use that technology to save ourselves from future global financial crises? So, to answer Wanda's question,
yeah,
I do think in the long run, yes, there is an opportunity for growth in corporations for BVI.
That's an interesting thought, actually, Jeffrey. But personally, I think it's not so much about risk identification as much as risk segregation and disbursement. So if we could, for example, have taken all those credit default swaps and tokenized them and spread them around the world, I think the pain would have been a lot less, because we all of us in financial services understand the pain of a margin call. So the idea of identifying risk is probably a little bit difficult because people tend to see what they want to see. But definitely if all of us own a little piece of something, we all get a bit stronger. And I think maybe the fallout might not have been as bad. That's my own 2.5 cents worth anyway. We have a question from Navanel Roy, Henry, and I think maybe you'll be best to answer this. The current crypto winter, do you see blockchain projects linked to real world assets growing faster, since they will be in a better position to deliver more consistent returns? Is it about returns or is it about alternative presentations, as it were? I don't know.
Absolutely. I think the over-focus on returns is exactly what got a lot of people into trouble in the first place. And if you're one of those people, don't feel bad. I was just reading that the Canadian pension fund put $150 million into Celsius, for example. That's obviously gone up in a puff of smoke. I think they've deployed about $500 million total to kind of DeFi lending protocols, lured by the promise of supernormal returns. So happens to the best of us. But what I think people should, again, focus on and ask that fundamental question of is, do I really understand what is going on at the underlying level? If someone's offering me double-digit returns, risk-free, do I 100% understand how they've gone and generated that return? Or am I just kind of crossing my fingers and hoping for the best? What I think is most exciting that I'm seeing right now in the industry, though, is you would have think of a crypto winter, a lot of traditional firms like banks are just going to kind of move on and ignore crypto for a while. And I'm actually seeing the start of the opposite. I'm seeing a lot more traditional institutions all of a sudden get quite interested in digital assets broadly, because I think there is this feeling that at long last, we're going to move past kind of unregulated assets that are a little messy. Things that actually, like it or not, are going to be regulated in a way that we're all familiar with. And I think there is a pervasive sense today in the industry that, look, we know that crypto has come already. We know that people are engaged in the market. Now, today, there is this golden opportunity for firms to kind of step in, bring their institutional knowledge and experience, and marry that with the best of blockchain technology. And by the way, governments too. right? I think the Singapore government and the BVI government are great examples of people saying, you know what, this technology trend is coming. We might as well make sure that we do it, but we do it correctly.
Yeah, I think, as Frederick was saying earlier, it's about education. The problem with education is that it's really boring compared to hype. And hype is always so much more exciting than education and awareness and responsibility. And when you're looking at the returns that some of these coins were kind of purporting to offer, it's easy to forget that education is key to everything. And so is awareness. Gentlemen, we have run over by 5 minutes. I'd like to give everyone an opportunity to say a few last words before we wrap up. I don't know, Deon, would you like to start?
Sure, I think it was a really informative session. I truly enjoyed the session. Thanks for all that joined. One of the other points I'd like to include is that we had an excellent experience working together with the regulators and one of our clients that was part of the sandbox, regulatory sandbox in the BVI. And it was an overwhelming experience in terms of sharing knowledge and really getting a chance, I think, from our client's perspective, to understand what the jurisdiction or domicile offers and what the regulatory environment is like before looking at fully getting licensed or putting, fully diving in. So, if anyone on the call or our clients have an interest, I think that's definitely an opportunity to take up in the BVI, and we'll be more than happy to comment or discuss separately on our experience on that. Sorry, go ahead.
I just wanted to check. So this sandbox is open to everyone, any kind of fintech or digital player, licensed or unlicensed? What are the
It's
parameters?
really the key focus is on companies or entities that have unique products, fintech or otherwise, digital asset companies, and that would like to really have a look at their products within a confined regulatory space before getting fully regulated as a licensed entity.
Okay. Frederick, do you want to go? There's a question from Elise, actually. Elise is asking, are traditional or TradeFi guys jumping into this DeFi space for fear of missing out, of FOMO, as it's called, right? FOMO?
Yeah, DeFi is definitely very exciting. I mean, me, myself, I'm a heavy DeFi user. A lot of my, my personal wallet transactions are based on DeFi, me experimenting with different things. I think what happens is that when you start understanding what it really is, right? Like very simply, what is automated market making? The idea that all of us, the decentralized world, can pool our funds together and create automatic market maker, or basically like a swap, right? And all of them earning these trading fees together. It's almost as if like me becoming a decentralized Fusang. But then at the same time, it lacks the governance that what Fusang has, correct? And that has what is very interesting about the DeFi world, and it's also what is very interesting about the CeFi world, the traditional finance side. And while a lot of people are participating in DeFi, we still have to keep in mind that it is highly experimental technology. There has been a lot of experience, there has been a lot of hacks, there has been a lot of different money coming in, and we aren't able to really truly verify where it's coming from. So these products are extremely high risk. They're very, very they're governed in a way while they say it's transparent, but at the same time is that the largest voter is typically one of the largest wallet holders, and they just take the entire governance votes. So it is definitely very, very interesting, but you have to do your own due diligence on it.
Yeah, so buyer beware. Buyer beware, Henry?
Oh,
absolutely.
As always. But, I guess my take-home message would be for all of the people, the institutions listening in on this panel, the fact that you've got the increasing quality of people on panels like this, and from such a spread all along the value chain, legal, regulatory, banking, right, the industry. To me, this is proof positive that, as I said, this wave of institutionalism is coming, and it's coming right now to crypto. To be honest, it's going to come a lot quicker than even I would have expected. And that's why I say this crypto winter, I truly believe, is going to turn out to be one of the best things to happen to crypto. And if you are trying to decide whether you should enter the industry, trust me, today is the right time.
Well, I made the pivot and it's been so exciting, you know, coming from legacy, as it were. I think Frederick remembers the days like 5 years ago and I understood nothing, and I still don't understand anything because it moves so quick, but that's the beauty of it. I don't know, Jeffrey, what do you think? Too quick for old fogies like us, do you think?
Well, yes, probably. I think I think a large part of this is you know, we've spoken about it, it's a learning curve. And it's a learning curve for everybody. Even if you're an expert in the area, you're still learning every day. And certainly, I think all of us learn every day. So that's a crucial part of it. One of the things I like about the BVI and about the BVI regulator is it has patience. It's watching what's going on. It's realizing, don't jump into something, think you understand it, to regulate it. It's not going to work then, you know. And even once you do come up with what you think is a very viable environment, you're going to need to keep on adapting it constantly.
Yeah, I couldn't agree more. I think in an ever-changing environment, especially in this kind of environment, a facilitative, open regulator is the key to success for any jurisdiction. And that's the only place to be. On behalf of BVI Finance, on behalf of Fusang, on behalf of everyone on the panel here, we'd really like to thank you for taking your morning, your evening, maybe even your afternoon off to spend this hour with us. Thank you very much. We hope to see you again. You'll have copies of the presentation as well as the recording of this in your thank you note that will come from us soon. Thank you very much and have a good the rest of the day. Thank you.
Thank you.